think investors took the weekend. I think the weather started to warm, and I think we're starting to look forward. I mean, we've been through a heck of a time over the course of the last 3 months, virus-related, market-related, I mean, you name it. And I think what you're starting to see is, look, it's starting to thaw. Economies are starting to reopen. It looks like the Federal Reserve and the federal government took Armageddon off the table with some of their actions. And then every day we're waking up to some bit of hope around kind of our collective innovations on the virus front. I think that has people feeling good that we will see an end to this. And better days ahead, and I don't think that's wrong.
But I agree with you, buddy. You know that, and we all hope for sort of this return to quote normalcy. But let's be clear: even if we get a vaccine, it's a long, long way off. You've got trillions of dollars now in debt that have been used to backstop some of these programs. It will take a long time to get that vaccine out around the world. And it's unclear whether or not the U.S. consumer is just going to step right back into a restaurant. I mean, the point is, the market is acting like the all clear has been sounded when there are still so many bumps in that investing road to go through for years, Steve.
Well, sure. But OK, let's take this one at a time. I think first and foremost, you're right. The period of social distancing that's coming, that's the difficult period, right? Where the economy reopens but can't run at full capacity. There is certainly risk with that. But when you're investing and when you're in the market, remember, the market is a bunch of people that are trying to get ahead of each other. You either have to be different or early in order to make money. And the earliest that you can get bullish is when data starts getting bad at a less bad rate. When unemployment claims went from rising 6.8 million a week to 6.2, that was the first moment that you could look at the data and find a reason to buy. And participants are doing that. Markets are looking forward. Markets were contemplating during the fastest 35% decline in history the chance that we were entering a depression-like scenario. With that off the table, I think market participants are cognizant that we have a recession and a tough slog ahead of us, but I'm not taking the future earnings of a bunch of companies and canceling them. Some for sure, and you can't own everything right now.
Yeah.
That's why you think you have to be selective, but the future does look better, Brian.
I do, and I like the optimism, and I hear what you're saying. Got to be first, you got to be early, got to take a chance. But let's be clear: if you're among those first buyers, the people who've been buying into the market, because somebody sure has, then you are also taking the risk of dealing with a second wave, of new lockdowns, of reclosings, if you will. This is not a market without significant risk.
The market, in our view, will follow how well this reopening goes. If it turns out, right, I think the market's base case scenarios, we've got 9 months of social distancing purgatory. Let's say as a base case scenario, June to March. If it turns out that treatment or vaccine gives us some view that it's only 9 months or it's less than 9 months, market has upside. If we're frustrated in our efforts or we're too aggressive as we reopen and cause infection rates to spike, then there's downside. So far, though, as states have reopened, we have not seen a spike in hospitalization rates, and that's a really good sign. And if we do have a second wave, we better be better prepared for it then than we were this time, because we've had time and we know what to do. So we may have another wave, but if we don't have to all lock ourselves into our home, the circumstances from an economic perspective won't be as dire as they were this time.